Assalamualaikum and hi, my name is Nurul Faizah binti Muhammad Rais, metric number 2025-738-287. Today, I will introduce the topic of medical cost risk and insufficient insurance or takaful coverage. Healthcare costs are increasing every year, and in Malaysia, medical inflation is estimated to be around 10% to 15% annually. Without adequate insurance or takaful protection, a medical emergency can quickly drain your savings, create debt, delay your financial goals, and cause emotional stress. This is why having the right financial protection is so important. Instead of choosing a plan based only on price, we should compare different plans, assess our healthcare needs, select suitable coverage, and review our policy regularly. In conclusion, proper insurance or takaful planning helps protect not only our health but also our financial future. As the saying goes, protect your health, protect your future. Thank you.
Assalamualaikum, my name is Nurul Edina Imani binti Hamarizan. Now let me introduce our client profile. Our client profile is 20 years old and he is currently working as a digital marketing executive. In terms of income, the client earns a gross monthly salary of 4,300 ringgit. After statutory deduction, including EPF, SOCSO, and PCP, the net monthly income is 3,800 ringgit. Next, let's look at the client's current financial situation. The client is married and lives with his wife, Mr. Shafiqah, who is a full-time housewife. At the moment, they do not have any children, which means the client is currently the sole income earned for the household. Recently, the client experienced a significant financial challenge due to an unexpected medical emergency. He was rushed to a private hospital for an emergency appendectomy, and the total medical bill came to 10,000 ringgit. Unfortunately, his company paid insurance only to cover 3,000 ringgit, leaving 7,000 ringgit to be out of the pocket. To cover these expenses, the client used his entire personal saving of 3,000 ringgit, reducing his saving balance to 0 ringgit. Since the remaining 4,000 ringgit could not be paid immediately, he charged it to the credit card. This has a result in a new high interest debt with an 18% annual interest rate, which could become increasingly expensive if it is not repaid quickly. Furthermore, client financial goals, which are divided into short-term and long-term objective. The client's short-term goal is to fully repay the 4,000 ringgit credit card debt as soon as possible, since the debt carries a high 18% annual interest rate. Clearly, it quickly will help reduce interest charge and improve his monthly cash flow. At the same time, he aims to rebuild a 3-month emergency fund. This emergency fund will provide a financial safety net and reduce the need to rely on credit if unexpected expenses, such as future medical emergency. Looking at the long term, the client wants to close the insurance protection gap by purchasing comprehensive personal medical card or takaful plan. This will provide better medical coverage and reduce the risk of large out-of-the-pocket healthcare expenses in the future. In addition, the client plans to establish a dedicated family fund within the next 3 years. This fund will help support future family needs, including raising children, education expenses, and other long-term financial commitment. In terms of spending habits, the client and his wife enjoy a modern lifestyle. They frequently dine out at cafe on weekend and often order meals through food delivery platforms such as Grab, Foodpanda due to their busy schedule. The client also maintains several monthly subscriptions, including Netflix, gym membership, high-speed home internet, which contribute to his regular monthly expenses. In addition, both the client and his wife tend to make impulse purchases during online sales, especially for household decoration and electronic gadgets. While these purchases may seem small individually, they can accumulate over time and reduce the amount available for saving. Regarding protection habits, the client previously had limited awareness of personal financial risk management. Before his recent hospitalization, he relied entirely on his employer's basic medical insurance without having an additional personal medical or takaful coverage.
Hi, Assalamualaikum and good day everyone. My name is Aiman Hakim and my part is debt management. For the current debt situation, we know from Mr. Hafiz's profile that he was incurred a medical emergency cost of 10,000 ringgit for an appendectomy. Mr. Hafiz got covered by his company panel 3,000 ringgit, but he lost all of his entire savings of 3,000 ringgit and was forced to finance the remaining 4,000 ringgit using a credit card. Why credit card is a concern? First, credit card debt is considered high interest debt. Second, interest rate of 18% is significantly higher than most personal financing product. Range of interest rate of higher purchase loan is only 1.75% to 5% per annum. Even housing loan takes only 3.55% to 4.5% per annum. Third, if only minimum payment are made, the debt may take years to settle plus interest charge is higher. Next, recommended debt repayment. The method that we chose is debt average method. Debt average method prioritizes debt repayment with highest interest rate, which is credit card first, while maintaining minimum payment on all other debts. Let's consider this for minimizing monthly spending. Even Mr. Hafiz has only one debt, but average method is the most suitable because first, credit card debt carries a very high interest rate, which is 18% per annum. Second, faster debt elimination allows earlier rebuilding of emergency savings. Third, paying it off quickly minimizes total interest costs. As you can see here, I made a table of suggested budget adjustment for Mr. Hafiz to monitor his spending so he can settle his credit card repayment as soon as possible. Mr. Hafiz's profile did mention that he frequently dining out, heavily food delivery order, impulse on online shopping and multiple monthly entertainment subscription, whatever the total amount is. But if Mr. Hafiz achieved to reduce all of these expenses to 600 ringgit a month, the credit card debt settlement can be fully repaid within approximately 7 months. Last but not least, the last part of debt management is risk and consequences evaluation. There are several financial risks if Mr. Hafiz don't take action towards his financial crisis. First, increasing interest costs. 18% interest rate will continuously increase. Consequences, higher repayment amount, longer repayment period, and reduced disposable income. Disposable income often referred to as take-home pay. It represents the fund available for basic necessities like rent, food, utilities, and personal savings. Second, inability to rebuild emergency fund. Mr. Hafiz must have emergency fund at least 3 months of salary. Consequences is financial vulnerability during future emergencies and greater reliance on borrowing. Third, debt cycle risk. Future emergency will force Mr. Hafiz to use credit card again. Consequences are multiple debts, higher debt burden, and potential financial distress. Fourth, family financial risk since Mr. Hafiz is sole income earner while his wife is a full-time housewife. Consequences are family income disruption if another emergency occurs and difficulty to purchase medical takaful for family. That's all from me. Thank you.
Assalamualaikum and hi, my name is Nur Syahmi binti Hamidun, matrix number 2026-532705. Next, I will present the savings goal recommendation for Mr. Hafiz. These recommendations are divided into short-term and long-term goals. For the short-term goals, which cover the next 12 months, there are two main priorities. The first priority is debt eradication. Mr. Hafiz should focus on paying off his 4,000 ringgit credit card as soon as possible because it carries a high interest rate of 18% per year. By clearing this debt early, he can reduce unnecessary interest costs and improve his monthly cash flow. The second priority is to build an emergency fund. The recommended target is RM5,700, which is equivalent to 3 months of essential living expenses. Having an emergency fund provides financial security and helps him deal with unexpected situations without relying on credit card or personal loans. For the long-term goals, there are also two recommendations. First, Mr. Hafiz should close his protection gap by purchasing a comprehensive medical card or takaful plan. This will provide better financial protection against unexpected medical expenses. Second, he should focus on wealth accumulation by investing consistently for retirement and his children's future education. Starting early allows his investment to grow over time through compounding. Overall, this recommendation will help Mr. Hafiz achieve better financial stability in both short-term and long-term. Now, I will explain the emergency fund planning for Mr. Hafiz. Based on his current financial situation, Mr. Hafiz does not have an emergency fund, although he has 3,000 ringgit in personal saving. However, this personal saving should not be considered a complete emergency fund because they may already be allocated for other financial needs. Therefore, we recommend that he puts a dedicated emergency fund with a target of 5,700 ringgit, which is equivalent to 3 months of his essential monthly expenses, estimated at 1,900 ringgit per month. To achieve this goal, Mr. Hafiz should save 760 ringgit every month. At this savings rate, he will able to reach the target in approximately 8 months. We also recommend setting up an automatic monthly transfer into an Amanah Saham Bumi Putra or ASB account. Automating the savings process encourages financial discipline and ensure that saving becomes a consistent habit. Building an emergency fund is very important because it provides financial security during unexpected situations such as medical emergency, job loss, or urgent household expenses. It also helps reduce dependence on credit card or personal loans, preventing additional debt during difficult times. Overall, having a sufficient emergency fund will improve Mr. Hafiz's financial resilience and provide greater peace of mind when facing unforeseen circumstances. Now, I will explain the recommended budgeting strategy for Mr. Hafiz. To improve his financial management, we recommended following of the 50-30-20 budgeting rules, which is a simple, effective method for managing monthly income. Under this strategy, 50% of his income of 190 ringgit should be allocated to essential needs such as housing, food, transportation, utilities, and 4 other necessary living expenses. Next, 30% of his income, or 1,140, should be allocated to personal wants, including entertainment, shopping, and dining out. While these expenses are important for maintaining a balanced lifestyle, they should be controlled to avoid overspending. The remaining 20% or 760 ringgit should be allocated to savings and debt repayment. This amount can be used to build his emergency fund while also helping him to achieve other financial goals. To ensure this budgeting strategy is successful, we recommend several action steps. First, Mr. Hafiz should track all his expenses using a budgeting apps. Second, he should reduce unnecessary subscriptions and avoid excessive spending on food delivery or dining out. Third, setting a weekly spending limit for non-essential purchases can help him stay within the budget. Finally, he should make saving a priority by setting aside money before spending on personal wants. Overall, by consistently following the 50-30-20 budgeting rules, Mr. Hafiz will be able to manage his finances more effectively, strengthen his savings, reduce financial stress, and achieve his short-term and long-term financial goals.
Assalamualaikum sir, and have a good day. So I will introduce myself first. My name is Farah Amira binti Rusaimi. I'm from the group NBF5N. So today I will present about the insurance and takaful planning for Mr. Hafiz. Based on the case study, Mr. Hafiz was admitted to a private hospital for an emergency appendectomy. The total medical bill was 10,000 ringgit. Unfortunately, his employer medical coverage only covered for 3,000 ringgit. So he had to pay the remaining RM 7,000 ringgit himself. Because of this, all his personal savings were used out. And he also have to use a credit card, leaving him with 4,000 ringgit in the debt and an interest rate of 80% per year. This clearly show that his current insurance protection is not enough to cover an unexpected medical emergency. Next slide is about the insurance and takaful recommendation. To overcome this problem, we recommend 3 insurance and takaful plan. The first recommendation is medical takaful with an annual limit of 200,000. This provides access to a private hospital, cashless admission, and also the cover hospitalization and surgery. This help reduce the financial burden if another medical emergency happen in the future. The second recommendation is critical illness coverage between 100,000 to 150,000. If Mr. Hafiz is diagnosed with critical illness, he will receive a lump sum payout that can be used to replace his income and support his recovery. Finally, we recommend family takaful with a coverage of around 500,000. Since Mr. Hafiz is the only income earning in the family and his wife is financially dependent on him, this plan will help provide financial support if anything unexpected happens to him. Lastly is about the insurance takaful key benefit. This recommendation will provide several important benefits to Mr. Hafiz. First, they improve their financial security by protecting his savings from unexpected medical expenses. They also provide family protection and his wife will continue to receive a financial support if something happens to him. Besides that, having the right insurance coverage gives him peace of mind so he can focus his recovery instead of worrying about medical bills. Lastly, this recommendation support his long-term financial stability by reducing future financial risk and help him achieve his financial goal. Overall, this insurance and takaful plan will help Mr. Hafiz with strong financial protection for himself and his family. That's all from me. Thank you, sir.
Assalamualaikum and good day. Next, I will present part D, retirement planning. Although Mr. Hafiz is only 28 years old, retirement planning should begin early to ensure financial security in the future. However, based on our client's profile, his recent medical emergency has significantly disrupted his retirement planning. Due to an emergency appendectomy costing 10,000 ringgit, his company's medical coverage only paid 3,000 ringgit, leaving him to pay 7,000 ringgit out of pocket. As a result, his personal savings were completely depleted, and he had to use a credit card to finance the remaining medical expenses. These circumstances have created several retirement challenges. Firstly, his saving has been reduced to 0 ringgit, meaning he no longer has any financial buffer. Secondly, he now carries 4,000 ringgit in high-interest credit card debt, which reduced the amount of income available for retirement saving. Thirdly, he relies mainly on EPF as his retirement fund. While EPF is an important retirement saving scheme, depending on it alone may not be sufficient, especially with increasing living and healthcare costs. Lastly, future medical expenses remain a financial risk. Without adequate medical protection, another medical emergency could further delay his retirement plans. Therefore, our retirement goal for Mr. Hafiz are to maintain financial independence, preserve his retirement savings, and prepare for rising healthcare costs so that unexpected medical expenses will not affect his retirement security in the future. Now, I will explain our recommendation based on the issue identified. Our recommendations are divided into short-term and long-term strategies. In the short term, within the next 1 to 3 years, Mr. Hafiz should first clear his 4,000 ringgit credit card debt, rebuild a 3-month emergency fund, and continue making his monthly EPF contribution. This step will help restore his financial stability before increasing his retirement investment. For long term, he should gradually increase his retirement investment, review his retirement plan regularly, and work towards achieving financial independence by the age of 60. The next recommendation is to strengthen his medical takaful protection. This recommendation is especially important because the client's financial difficulties were caused by insufficient medical coverage. By purchasing comprehensive medical takaful, future healthcare expenses can be covered without using his retirement saving or relying on additional debt. This allows his retirement plan to stay on track even if another medical emergency occurs. Once his financial situation has stabilized, Mr. Hafiz should begin building additional retirement wealth by investing 300 to 500 per month in long-term investment instruments such as private retirement scheme, Amanah Saham Bumi Putra, or unit trust. Those investments will complement his EPF savings and provide additional income during retirement. Finally, Mr. Hafiz should continue contributing constantly to EPF and avoid making premature withdrawal. Maintaining regular EPF contribution allows his investment saving to benefit from long-term compound growth and strengthen his financial security in retirement. In conclusion, our retirement planning recommendations are closely linked to the client's financial situation. By recovering from his current financial setback, strengthening his medical takaful protection, continuing his EPF contribution, and investing consistently for the long term, Mr. Hafiz can rebuild his retirement savings and achieve financial security despite the medical challenges he has experienced. Thank you. That concludes my presentation on retirement planning.
Next, I will explain the basic tax relief and rebate applicable for tax planning. The first tax relief is individual and dependent relative relief, amounting to 9,000 ringgit. This relief is granted to every resident individual to reduce their taxable income. The second is spouse relief of 4,000 ringgit. This relief can be claimed if the taxpayer's spouse has no sources of income or meets the eligibility requirements set by the Island Revenue Board. Next is the social contribution relief with a maximum claim of 350. This relief is based on the amount of social contribution made during the year of assessment. In addition, taxpayers are entitled to a lifestyle relief up to 2,500 ringgit. These cover eligible expenses such as the purchases of books, computer, smartphone, internet subscription, and other qualified lifestyle-related expenses. There is also additional lifestyle relief of 1,000 ringgit, which provide an extra tax deduction for specific qualified lifestyle expenses under the applicable tax regulation. Finally, taxpayer may claim APF contribution relief up to 4,000 ringgit based on the amount contributed to the employee's provident fund during the year of assessment. This tax relief helps reduce an individual taxable income, which in turn lower the amount of income tax payable and support effective tax planning. Next, I will explain one of the strategies to minimize tax burden legally. The first strategy is to purchase a personal medical insurance or takaful plan. Besides providing financial protection against unexpected medical expenses, it is also offer tax benefit. Taxpayer can claim the eligible medical insurance or takaful tax relief, provided that the policy meets the requirements set by the Island Revenue Board. Therefore, purchasing a personal medical insurance or takaful plan is an effective strategy because it's not only protect an individual financial, but also help reduce tax liability legally. The second strategy is maximize individual tax relief. Taxpayers should claim all eligible tax relief, such as individual relief, EPF contribution, social contribution, and lifestyle relief when filing their income tax return. Maximizing this relief helps reduce taxable income and lower the overall tax payable. The third strategy is keep a proper tax record. Taxpayers should organize and return all receipt, invoice, and supporting document to sustain their tax relief and deduction claim. Maintaining proper record not only make the tax filing process easier, but also serve as evidence in the event of a tax audit. The fourth strategy is to claim lifestyle tax relief wisely. Instead of spending on non-essential items, taxpayers should prioritize purchasing items that qualify for lifestyle tax relief, such as a computer for work or study, reading material and books, sport equipment, and other eligible lifestyle expenses. This allows taxpayers to enjoy necessary purchases while maximizing their available tax relief and legally reducing their tax burden.
Next, I will present the financial planning analysis and recommendations for Hafiz estate planning. Estate planning is important because it protects assets, ensures they are distributed to the right beneficiaries, helps avoid family disputes, and provide financial security for loved ones. There are three main estate planning tools. A will clearly states how personal assets should be distributed. A nomination allows beneficiaries to receive EPF savings and medical takaful benefits more quickly. A trust is suitable for managing future investments and property according to the owner's instructions while protecting the beneficiaries. For Hafiz, we recommend distributing personal savings through a will, EPF savings and medical takaful through nominations, future investments through a trust, and future property through either a will or trust, depending on future needs. Finally, Hafiz should prepare a legal will, update nominations regularly, consider setting up a trust, review the estate plan periodically, and discuss the plan with family members to ensure everyone understands his wishes.
Finally, to conclude Mr. Hafiz's case, based on our analysis, we have developed a financial plan that focuses on improving his financial stability through 3 key phases. The first phase is to gain financial control by paying off his 4,000 ringgit credit card debt using the debt avalanche method. This strategy helps reduce interest costs and improve his monthly cash flow. We also recommend obtaining an additional takaful coverage to strengthen his financial protection against unexpected medical expenses. The second phase is to restore financial stability by following the 50-30-20 budgeting strategy and building an emergency fund. By saving 760 ringgit every month, Mr. Hafiz can achieve his emergency fund target of 5,700 ringgit within 8 months. This fund will provide financial security during unexpected situations and reduce his reliance on debt. The final phase is to maintain long-term financial security. We recommend contributing 500 ringgit per month toward retirement savings to achieve a target of 500,000 by retirement age. In addition, proper estate planning, including a valid will and trust nomination, is important to ensure his assets are distributed according to his wishes and his family's future is well protected. In conclusion, this recommendation provides a practical and achievable financial roadmap for Mr. Hafiz. By following this financial plan consistently, he can reduce his financial risk, strengthen his financial position, and achieving both his short-term and long-term financial goals. Finally, to conclude Mr. Hafiz's case, based on our analysis, we have developed a financial plan that focuses on improving his financial stability through 3 key phases. The first phase is to gain financial control by paying off his 4,000 ringgit credit card debt